something feels wrong. Gas prices look stable. The stock market keeps climbing. Politicians keep saying the economy is strong. But behind the scenes, the global energy system is starting to crack. And almost nobody is talking about the real danger. Because while headlines tell you everything is under control, physical oil shipments, shipping routes, bond markets, and food supply chains are flashing warning signs everywhere. This is not just about oil anymore. This is about your grocery bill, your rent, your car payment, your job, and the possibility that the world economy is quietly drifting toward another major financial shock while most people are distracted by stock market rallies. Think of it like the Titanic. The orchestra is still playing, people are still dancing, but below the deck, water is already flooding in, and tonight we need to talk about why that matters. Here is the hidden truth almost nobody understands. Right now, there are basically two oil markets. One is the paper market. That is the price you see on TV and financial aid. The other is the physical market. That is the real-world price countries actually pay to receive oil deliveries. And recently, those two prices have started drifting apart in a way that almost never happens. Imagine walking into a grocery store where the sign says, eggs cost $3, but when you reach the register, the cashier says, if you want real eggs today, it will cost $8. That is the kind of disconnect energy traders are starting to notice. And historically, when paper prices and physical reality separate this dramatically, something usually breaks because paper contracts can be manipulated. Physical shortages cannot. You can print money, you can change headlines, you can calm markets with speeches, but you cannot magically create millions of barrels of missing oil overnight. And that is where things get dangerous. Mainstream headlines keep repeating the same comforting story. Inflation is cooling, the economy is resilient, everything is stabilizing, but physical world data is telling a completely different story. Shipping costs are rising, energy transport routes are under pressure, strategic oil reserves have already been heavily drained over the last few years. Meanwhile, several governments around the world are quietly preparing for fuel stress scenarios, and governments do not prepare for emergencies they believe are impossible. That is because energy affects everything. Oil is not just gasoline. Oil moves food across the country. It powers farming equipment. It fuels airplanes, trucks, factories, and cargo ships. Oil is basically the bloodstream of modern civilization, and when blood stops flowing properly, the entire body starts shutting down. That is why energy crises spread so fast. A fuel shock becomes an inflation shock. An inflation shock becomes a debt problem. A debt problem becomes a recession. It is like dominoes falling in slow motion. At first, nobody notices. Then suddenly, everything starts collapsing at once. Now, maybe you are thinking, okay, but how does this affect normal people? Simple. If energy prices surge again, the average American gets squeezed from every direction. Gas stations first, then groceries, then utilities, then transportation. Suddenly, your weekly grocery bill costs 20% more. Your electricity bill jumps. Flights become more expensive. Food delivery gets costly. And here is the scary part. Most Americans are already financially exhausted. Credit card debt is near record highs. Car payments are crushing households. Rent is still elevated. Savings are falling. So another inflation wave could hit people who are already barely staying afloat. That is why this matters. Economic crises do not start when rich investors panic. They start when ordinary people can no longer absorb higher costs. And once consumer confidence breaks, everything changes. Now, here is where this story becomes even bigger. Because energy is not just economics, it is geopolitics. Global superpowers understand one thing better than anyone else. Whoever controls energy controls leverage. And right now, multiple nations are fighting for influence over shipping lanes, commodity pricing, manufacturing supply chains, and strategic resources. This is not just a market battle. It is a global chess match. On one side, you have Western economies struggling with debt, inflation, and slowing growth. On the other side, rival powers are building alternative trade systems, stockpiling commodities, and reducing dependence on the US dollar. That is why oil disruptions create panic among elites. Because if energy markets destabilize long enough, entire financial systems can start shaking. Think about it. The modern economy runs on debt. Consumers run on debt. Corporations run on debt. Governments run on debt. And debt only works smoothly when borrowing stays affordable. But if energy inflation surges again, central banks may be forced to keep interest rates high for longer. That increases borrowing costs everywhere. Mortgages, businesses, credit cards, government debt. Everything becomes more expensive. And suddenly, the system starts feeding on itself. itself. Economists call this a debt spiral, but honestly, it is more like quicksand. The harder the system struggles, the deeper it sinks. Here is the part Wall Street does not want to talk about. Markets today are acting as if nothing serious can happen. Stocks remain high. Investors keep buying risky assets. Artificial intelligence hype dominates headlines, but history tells a different story. Major financial crashes often happen after periods of maximum confidence. Right before the 2008 financial crisis, people believed housing prices could never fall. Right before the dot-com collapse, people believed tech stocks could only go up. And before almost every major recession, markets looked strangely calm. That is because financial systems behave like pressure cookers. Pressure builds quietly for months, sometimes years. Then one event becomes the spark. One shipping disruption, one debt crisis, one geopolitical escalation, one banking shock, and suddenly confidence disappears overnight. That is why some analysts compare today's economy to a giant Jenga tower. Every year, more debt gets added, more leverage, more speculation. The tower keeps growing taller, but also weaker, and eventually, one wrong move brings the whole thing down. Now, let us talk about the nightmare scenario. What happens if energy shortages intensify while inflation stays high? This is where things could become extremely dangerous, because central banks would become trapped. If they lower interest rates too quickly, inflation could explode again. But if they keep rates high, debt stress increases across the economy. That creates the possibility of stagflation, slow economic growth, high inflation, rising financial stress, all happening at the same time. That is one of the hardest economic environments for governments to escape. And if confidence in government debt weakens during that process, you could enter a true debt-death spiral. More borrowing, higher interest costs, larger deficits, more money printing, currency weakness, even higher inflation, a vicious cycle. And remember, modern economies depend almost entirely on confidence. Confidence in banks, confidence in currencies, confidence in governments, confidence in markets. Once confidence breaks, systems unravel faster than most people think. That is why smart money watches physical reality more than headlines, because eventually, reality always wins. Now, to be clear, nobody knows exactly how this ends. Maybe tensions cool down, maybe supply chains recover, maybe governments stabilize markets again. That is possible, but the warning signs are growing louder. Energy stress, consumer weakness, rising debt, global instability, fragile supply chains, and a financial system built on record leverage. The scary part is not one single crisis. It is that all these problems are starting to collide at the same time, and history shows that is usually when major turning points happen. So here's the question I want you to answer in the comments. Do you think the economy is actually stable right now? Or are we being shown an illusion while bigger problems build underneath the surface? And more importantly, how are you preparing financially for the next few years? Are you buying assets, holding cash, investing in commodities, paying off debt? Or do you think this entire crisis narrative is overblown? I genuinely want to hear your perspective. If you enjoyed this video, subscribe, because the next few years could completely reshape the global economy, and most people still have no idea what's coming. See you in the next one.